Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is April 22nd, 2025. We are going to have a silver price update. It has been a while since the last video here on YouTube. There's been so much going on. We've had gold that just touched $3,500 per ounce. Incredible new all-time highs. We have silver that is still lagging, still kind of struggling to get above that $33 level. However, we're going to take a look at the charts and you're going to see how there's an analogy back in the last cycle, 2008, 2009, 2010, 2011, that cycle where gold broke out the way that it did recently here and silver was lagging for almost an entire year back then. And then wait until you see what happens to silver after silver finally starts following gold. It tends to catch up with gold, but on steroids. Basically, it leverages the gain in gold, but just a later date in the cycle. So it seems like we still have a little ways to go here until silver finally starts catching up. And that's what I want to talk about in this video. You know, I have a lot of people that ask me about the individual companies that I invest in. As you know, I own some physical gold. I own some physical silver. And with my consultations with clients, I recommend that investors own a basket, some physical gold, some physical silver, as well as some of the gold and silver mining companies. So in the second part of this video, what I'm going to do is discuss completely for free one of the silver mining companies that I own shares in. Now, this is the research that our premium subscribers pay several $100s per year to receive. Every once in a while, I give away some of that information here for free to let people know what I am doing. One of the companies that I own shares in is called Impact Silver Corp, and the ticker here in Canada, which is the primary exchange, is IPT, and in the US, it's ISVLF. The reason that I like Impact is because they are approaching 1 million ounces per year of silver equivalent production. And if you look at every silver cycle, every time that silver moves in one of these major dramatic waves, wait till you see what happens to the share price of Impact Silver. The last thing that I want to tell you is this is a company that I own shares in the open market, but if you're a higher net worth investor, if you are looking at investing a minimum of $7,000, $7,000 US, then I want to tell you how we have negotiated with Impact directly because I have contacts. I know the management personally. I meet with them several times per year. We have arranged to buy shares at a discount by a private placement that we have available only until this Friday, April 25th. So if you'd like to join us, basically what happens if you participate in the private placement is if the shares go higher, you get nearly double the gain in the private placement compared to buying the shares in the open market. And like I said, this is a company that I do own shares in the open market. If you're not ready to invest the minimum $7,000 US, I think this is a company that is worthy of your consideration in the open market. Last thing I want to say before we look at the silver price here, based on the fact that gold has already broken out, where is silver? I want to remind you of my guarantee. I talk about the companies that I am investing in. Nothing more, nothing less. My guarantee is that I do not take any fees or kickbacks, none whatsoever, from the companies that I am investing in or any of our subscribers are investing in. That is not my business model. You have to be very careful in this industry where you're getting your information from because some people have a business model which is that they take kickbacks from the companies to promote the companies. That is not what I do. I publish independent research for people that value the research, and I hope that you'll consider joining us if you find some value in the research. So that is my guarantee to you. Impact Silver is one of the silver companies that I like. And now let's look at what is going on with the silver price. Our legal disclaimer for one moment. And now we go. The first thing I want to show you is the sort of place that we are in, that we appear to be in with silver versus gold compared to the last major cycle, the 2008 to 2011 cycle. So if you look here at gold versus silver, the peak that gold made at about $1,000 per ounce in early 2008, and then you notice that silver here peaked just above 20 in early 2008. And notice how after gold broke out above $1,000 per ounce in late 2009, notice where silver was. I mean, at the time, silver was still at about 15. And notice that even after gold broke out and gold started trending higher for the next year, I mean, 1,100, 1,200, 1,300, right? Gold's clearly trending higher. And at the time, remember, this was an all-time high for gold. Gold was in blue sky territory. Silver, what? I mean, it just ground sideways for another year as gold was moving into this blue sky territory. Okay, so remember this setup, and then let's fast forward the chart. Let's remove the black one more year. What happened? That all of a sudden, in August of 2010, all of a sudden, silver decided it was time to follow gold. Sometimes these things happen out of the blue. All of a sudden, you have enough accumulation that has happened. Enough investors say, wait a minute, gold is at an all-time high. I don't want to spend all my money on gold. I'd rather buy more silver for my money. And they pile into silver. And then look at what happened when silver finally caught up with gold. Late 2010 into early 2011, silver tripled in 8 months. That is a major catch-up move that happened in less than a year, but you had to understand the big picture. You had to understand that gold was in the driver's seat, in the leadership position. Silver often lags, but when silver finally catches up to gold, it tends to do so in a major leveraged kind of way. So I think we're in sort of this window right now where silver is lagging. We have to look one step ahead and look at the history of these cycles. Gold is in blue sky territory now in the present cycle above 3,000. The next logical step is for silver to catch up in a major type of way if this cycle is going to rhyme with something like happened back in all of the previous cycles. Okay, let's pull up some of the details on impact. This is the big one. This is why I really like impact here at these levels. If you look, this is a 20-year chart. We're going back to 2004. You look at this 20-year support zone in here in this range of about 12 to 22 cents. This is on the primary exchange in Canada. The IPT is the primary one, and then they have a secondary listing in the United States as well. But you look at all the times that impact bottomed in this 20-year support zone, and you look at the moves that had happened every time that it bottoms in this zone. I mean, I'm talking 1,900% here in the mid-2000s, 1,670% following the crash of 2008 up to the peak in 2011, almost 1,000% in early 2016, 470% here in 2020 following the coronavirus panic, right? And now look where we are. We're back in the same 20-year support zone. I mean, every time that impact has bottomed in this support zone, it has represented a major buying opportunity if you can just hold on until what? Until the actual advance happens. The thing that tends to happen in these cycles is that people get frustrated and, they see it moving sideways for a year or two, as it has in the past some of these times, and they get frustrated and they sell before the actual move has a chance to happen, before silver has a chance to follow gold. So here we are. We're in the 20-year support zone again. How much higher is this thing going to move this time? That's the question. No one can predict the future with 100% accuracy, but if you look at all the previous cycles, this is a highly favorable reward versus risk proposition, given that we're buying in the 20-year support zone. I can tell you what's going to happen. I can look forward a few years into the future. And I can predict that when silver has already broken out, we're going to have Impact Silver back up here closer to some of the recent highs. And that's when everyone is going to want to buy. And that's when, ironically, I'm going to be saying, look, this is probably not a good time to buy several years into the future. But I can tell you that's when people are going to be piling in. We want to act as contrarians. We want to be buying when no one is interested. That is, generally speaking, in the present window that we are in right now in this 20-year support zone. Okay, so let's look at some of the company fundamentals. As I said, this is a Canadian company that has all of its operations, however, in Mexico. The tickers are right here. The primary ticker is IPT. That's the Canadian exchange. And then the secondary ticker you can also buy in the United States, ISVLF. Now, this is a company that, as I said, I would buy shares in the open market. Let's talk about the fundamentals. This is a small company. The total market cap is only 35 million USD. It's very easy for a company of this size to go from, let's say, 35 million up to 100 million, 150, 200 million. Very easy for these smaller companies to see significant increases in their market caps in the proper backdrop. I like that the insiders and the institutions own about 30% of the company, so that's strong insider ownership. Remember, this is a producing company. They're producing 21 million in revenue estimated for 2024. So they do have this revenue coming in. Now, this is the big one. Before we go on to any of the other fundamentals, I want to share with you, if you choose to invest with us in the private placement, the things that you are going to get in the private placement that you do not get if you buy the same shares in the open market. First of all, you get a discount on the shares themselves. You get to buy at a 5.5% discount, so you're already in the profit the moment you start. There's no other way to get shares at a discount other than to participate in this private placement. But secondly, the really big thing is that you get these free warrants. And you get the warrants for free because you're helping the company to fund their operations. So they give you this bonus, these warrants. And the warrants are good to buy one additional share at a price of 24 cents at any point for 3 years into the future. So remember, the warrants are not an obligation. You do not have to buy shares if you don't want to in the future. But let's say, think about this. 3 years in the future, you have this buffer zone. Here we are in April of 2025. We just looked at the chart of what happened with silver after it broke out in 2010. It tripled in less than a year. Imagine where silver prices can be by April of 2028. If gold is at 4,000 or 5,000 per ounce by 2028, silver could be at 50, it could be at 75, it could be at 150 if it really breaks out. This could really get to be some upside for silver. So with these free warrants that they give you, you have 3 years to decide. It's totally optional to you. What that gives you is the additional upside, but it's no obligation. You're not forced to buy more shares if the price happens to go lower. But if the price goes higher, you get this additional upside. And I'm just trying to express that is major additional upside for this that you do not get if you buy the shares in the open market. We'll look at the math for this in a few moments. Remember, to participate in the private placement, the minimum is $7,500 US. That's roughly equivalent to 10,000 Canadian dollars, but 7,500 USD is the minimum for the private placement. Let's talk about some more of the fundamentals. Now, the one negative thing about this company is that their total all-in sustaining costs are rather high at about $35 per ounce. And that's why they're still operating in the negative on an earnings basis, even though they are making 21 million in revenue. So what I want to do is talk about these all-in sustaining costs for a moment and show you why in a rising silver price environment, if we think that silver is going to rise and follow gold within the next 3 years, like it did in 2010, like it did in 1979 when silver moved from $6 up to $50 per ounce in the last year of that bull market, it's actually the high-cost producers like Impact that benefit the most in the final stages of the bull market. So let's look at this comparison here for a moment between high-cost producers and low-cost producers. Okay, current silver price is $33 per ounce. This is the same whether you're a high-cost producer or a low-cost producer, right? The all-in sustaining cost, this is going to be the difference. So imagine that a high-cost producer like Impact, imagine that it costs them approximately $30 per ounce to get every ounce of silver out of the ground. And for a low-cost producer, let's imagine that it costs only $15 to get every ounce of silver out of the ground. What does that mean for the profit of these companies? For the high-cost producer, 33 minus 30 means that they're only making $3 per ounce in profit, right? This is just basic math. For the low-cost producer, it means that they're making $18 for every ounce that they extract from the ground. So we can clearly see that with silver prices in the current range of 33 per ounce, it's better to be a low-cost producer. This should make sense. Aha. Now, wait a minute. What if the silver price rises just from 33 to 50 over the next 3 years? What if it goes from 33 to 50? This is a very reasonable increase for the price of silver. Follow the math with me. So we said silver goes from 33 to 50. That's the same for both the high cost and the low cost producers. The sustaining cost, imagine that it still costs them the same. It still costs them $30 and $15 respectively. So the cost doesn't change. The only thing that's changed here is the price of silver. Look at what happens to the profit. The profit now for a company like Impact has moved up to $20 per ounce. The profit for a low-cost producer has moved up to $35 per ounce. Okay. The low-cost producer, yes, is still making more per ounce. However, it is the change or the increase in the profit from 3 up to 20 in this scenario where silver itself is moving up to $50 per ounce. Notice how the increase in the profit for the high-cost producer has gone from 3 to 20, or what? A 566% increase in the profit per ounce, versus for the low-cost producer, they've only moved from 18 up to 35, which is only a 94% increase in the profit. So do you see how for the high-cost producer, when silver goes from 33 to 50, they have achieved nearly a 6x increase in their profit, whereas the low-cost producer has not even doubled their profit. So this is why, guys, this is, a lot of people favor the low-cost producers. There is a difference in the strategy that makes sense in the later stages of the bull market than compared to the earlier stages in the bull market. Yes, the low-cost producers are safer, but if we are going to have the major follow move here in silver, if silver is going to move from 33 to 50, or can we imagine that it breaks 50 and moves to 75 or 100 or 150, you want to be, all things considered, in the higher cost companies because they are going to have the most leverage in the final wave of the bull market. This is just how the mathematics work. High cost versus low cost producers. Okay. Impact is a high cost producer. Let's remember that. Let's look at some of the fundamentals. Here are Impact's operations. They've got 3 primary sites that we are going to talk about that they have operations at. Remember, this is a Canadian company. All of their headquarters, management, everything is in Canada. And they have their operations in Mexico. Remember, Mexico is the largest silver producing country in the entire world. It is number one in the entire list. So silver history goes way back in Mexico. Let's look at their three operations. Now, Guadalupe is their existing producing mine. This is where most of their revenue is currently coming from. Capir is a mine that is sitting on care and maintenance. It's currently not operational, but they're waiting for higher silver prices to bring this mine back online. So they have that additional optionality in the future. We're going to focus on number 1 and 3. Number 3 is their second producing mine, the Plomosas mine. And this one is a new acquisition here just within the last year. So they're currently ramping up operations at Plomosas. They have ongoing operations at Guadalupe. Capir sits on care and maintenance until we get higher silver prices. Let's look at that number 1 site, the Guadalupe site, currently operating at 400 tons per day. The capacity is still higher, 535, so they have the ability to increase operations still at Guadalupe if silver itself goes higher. Let's look at where this set of mines exists. This is actually a series of mines. It's actually 6 small mines that all exist around the Guadalupe plant. And it's right here in this district. It's really a zone in central and west Mexico called the Royal Mines of Zacualpan district. It's in this belt here in central Mexico. And you can see all of the large silver mines and silver deposits that exist in this zone. Impact is kind of right here, sandwiched in the middle. This set of mines that goes to the Guadalupe plant has already produced 13 million ounces of silver since 2006. And it is a very high-grade silver production set of mines. 91% of revenue from these mines comes from pure silver. This is much higher than the industry average. The industry average is about 40 to 50% silver, and the rest comes from copper, lead, and zinc. So Guadalupe here is a very high production, high purity silver mine. We can look at the history of their silver production here, going back for almost the last 20 years. Last 4 or 5 years, they've been averaging about 650,000 ounces of silver per year. This year is going to come in that range. These figures are only through Q3 of 2024. They still have one more quarter to report. So they're going to come in somewhere in the range of the last 5 or 6 years here. Fairly steady operations in the low 600,000s for the Guadalupe. And remember, that's over 90% silver by revenue. Now we move on to their new acquisition. This is the Plomosas. This is what I said is number 3 of their 3 primary operations. This has the potential to blow out all of the previous operations as far as size and scale. It has the potential to do that. You really have to understand, however, what is going on here with the geology of Plomosas in order to understand what the potential is for this. So right now, this is a small mine. It's running at 80 tons per day. Capacity is 150. They're currently ramping it up. And let's look at some of the fundamentals behind this Plomosas. Plomosas is a type of deposit that they believe is going to fit into this category called a CRD. And I'm going to come back to what this CRD is in a moment. The largest CRD in the world is called the Santa Eulalia mine. It's located west of Plomosas, and this is a huge mine. It's produced over 450 million ounces of silver throughout its life. Let's take a look at the map here just so we can understand where this is. So here's Impact's Plomosas, and right here is this Santa Eulalia mine. It's about 50 miles away. And we can see some of the other major CRDs and other major mines that exist in this zone here in the northern part of Mexico. Cinco de Mayo is a huge CRD. We have Plomosas operating here just about 100 miles south. We have the Plomosas mine up here in northern Mexico, further north. This is a massive mine. And so the important thing to understand is that Impact is operating this Plomosas mine at a very small scale, but they are exploring right now in the background to the sides and beneath the existing producing Plomosas mine because they believe that this is one of the CRD deposits. They believe that this is going to turn out to be a CRD. Let's talk about the existing deposit as it is and then what the potential is if, in fact, this proves to be a CRD as they think. So the existing deposit here we can see is made up of some silver, some lead, and it's a primary zinc mine. So they've got a polymetal deposit. All of these CRDs are polymetal deposits. And depending on where in the deposit you're looking, it can either be primary silver. You can actually have a high concentration of gold as you get to the core of the deposit. And then as you get further out to the edges of the deposit, it tends to be more lead and zinc. So if we take all of these resources right here, in the indicated category, 235,000 ounces of silver. In the inferred category, 470,000. And then we take the tons of lead and the tons of zinc. If we take all of this and we calculate that out to what that would be in silver equivalent, in other words, take all of the base metals, take all of the known silver, and then calculate that into the current price as it would be in silver ounces, what we would get is a total resource of 17.5 million ounces of silver. Okay. So this is, by silver standards, by how this goes, this is a fairly, let's call it small to medium size silver deposit, 17 million ounces. At the current rate, however, of production, this would get them over 15 years of production, actually over 20 years of production. So it's good enough for the current standard of operations. But still, this is a fairly, let's call it small size silver deposit, right? So the point is to remember where this Plomosas is in the big picture of the other major mines that we just looked at right here, right? 50 miles or so away from one of the largest CRD deposits on the face of planet Earth, and then surrounded by these other major CRDs and other major silver mines. So when you understand where this is in the geology of Mexico, this is where it gets exciting as far as the upside for exploration potential, okay? It's not that it's currently a huge mine, but it's the upside in the exploration potential that is the key for this Plomosas mine. This is the Plomosas acquisition. This is the entire acquisition. For scale right here, you can see that this is about 1,000 meters. So this is a 7 to 8 kilometer zone that they have purchased here with this Plomosas mine. The current production is happening right here at this little red dot. So the existing Plomosas mine, which I said is a rather small to medium-sized mine, is only 1% of the total land package. And you can see that all the way up here in this district, they're getting very high grades of zinc. I mean, for zinc, anything above 10% is very economic. So they're getting grades 20%, 13%, 14%, 13%. They're getting some decent lead values here as well. This is the entire land package. This is what they are mining right now. Now, if we study these CRDs throughout history, remember, I talked about this is the potential for them to reclassify this small existing mine and show that this may be a CRD. This would be a game changer. You have to understand what these CRDs, or carbonate replacement deposits, what these actually are. So let's go through this together. A carbonate replacement deposit is characterized by its polymetallic nature, which indicates the presence of multiple metals such as copper, gold, silver, lead, manganese, and zinc. Okay? Now, this is a diagram of what a typical CRD would look like. And the thing to remember is these CRDs come from deep within the earth. And you have this intrusive core, this really wide core you can see here in red. And then from that core, as it gets closer to the Earth's surface, these metals they actually go in and they replace mineralogy that exists at the Earth's crust, at the Earth's surface. And the minerals get replaced by the intrusions of these host elements within the CRD. And so it pushes up, it pushes out, and it actually replaces the minerals that exist, but just in different concentrations in different portions of the CRD. So let's continue now. The key is that if this in fact turns out to be a CRD, the mineralization extends over a distance of 7 to 8 kilometers. So remember how here we were looking at the existing mine is only 1% of the total land package, but they're finding mineralogy at other parts of this package. So far, this looks like it's a hint that this could in fact be a CRD. They still have to do a lot more exploration. So the way to think about this Plomosas mine is that this is a small producing mine that has significant exploration potential if in fact they prove this to be a CRD. So I said the mineralization in a typical CRD extends 7 to 8 kilometers from the intrusion. We have a land package here that happens to be 7 or 8 kilometers. And what you'll notice here is that in the typical site, closest to the intrusion site, what you have is a silver, closest to the intrusion site, you have copper and gold, which is then followed by what? Lead, silver, and finally zinc, manganese, okay? So remember this, closest to the intrusion site, what we're talking about here is we'd be talking about the red on this diagram. You're going to have copper and gold, and then as you get out further into some of the chimneys, as they call it here, into some of the veins that extend toward the surface, you have more lead, silver, and zinc, and this happens to be what they are finding now. So these CRDs exist throughout nature in the earth, and they are created by similar processes, similar geological processes. And so they have fairly similar characteristics, whether they're happening here in Mexico or whether they're happening, for example, in China. And so here they're talking about the similar process known as replacement, which leads to the similar mineral composition across all of these CRDs. Now, if we look at some of the comparable CRDs, if in fact this turns out that this district that they have purchased here in Plomosas turns out that it is going to be a CRD, look at the upside potential. For example, look at the Coeur d'Alene deposit in Idaho, United States, 250 million ounces of silver equivalent. Look at the historical Comstock lode here in Nevada. This is one of the original CRDs found in the United States, 200 million ounces of silver equivalent. Then look at some of the nearby ones. We talked about this one. This is the closest one to impact, the Santa Eulalia mine, 450 million ounces of silver equivalent. The Cinco de Mayo project, we looked at this on the map, just north, about 150 miles north, 300 million ounces of silver equivalent. Compare these numbers to what Impact has currently, 17 million ounces of silver equivalent, and you can see that the potential is 10 to 20x. If what they are finding here in distinct parts of the Plomosas mine, remember they're only mining about 1% of it, if what they are finding turns out that they have one of these CRD deposits, then this is a 10 to 20x potential. So again, the way to think about Plomosas is that it's a small existing silver, lead, zinc mine with major upside exploration potential. And so the reason, to come back to Impact, the reason why their costs are so high across the board, part of the reason for that is that they're pumping into Plomosas every year millions of dollars. I think this year they're scheduled to invest over $6 million into exploring Plomosas. And so, there's some people that are saying, well, why are you spending so much money on Plomosas? Why not just, mine the current deposits as they are? And it's because if Plomosas, in fact, turns out to be a CRD, this thing is going to be one of the largest deposits in the world. Currently, the market is not rating it at that. Currently, the market is saying only a 35 million market cap. And so Impact is saying, look, we have the signatures of a CRD. If, in fact, this is a CRD, we will blow this thing out of the water, and this will be a multiple of the current price. And so that's why they're operating at a loss overall. It's because they're pumping all this money back into exploration. That's why they're raising the $3.5 million right now. That's why we have the opportunity here for a market that is overlooking where this company could go if, in fact, they expand the potential at Plomosas, and if we are right that the overall silver market is going to follow the gold market. We talked about the 10 to 20x potential at Plomosas. Nothing is guaranteed. Maybe they don't find anything more, but they have a lot of signatures of it already. So if they can do that, and then we come back to the Impact chart itself, and we talk about how the Impact chart itself is in this 20-year support zone, where every time it's gotten into this zone, it's represented a good buying opportunity. This is a different company than it was in past years because they have this new Plomosas acquisition that they are exploring. This is a high potential situation. This is why I like the company. This is why I own shares in the company. This is why I have warrants in the company. Okay, last but not least, what I want to do is come back to that Impact chart, and I actually want to pull it up twice for a moment. Exact same chart, last 10 years, going back to 2015. We talked about the 20-year support zone. Now, why am I pulling this chart up twice? It's because the first thing that I want to do is show you what would happen if you buy shares in Impact in the open market and the company succeeds and it gets back to its former peaks. And the next thing that I want to do is show you what would happen if you buy shares at the discount in the private placement that we have open right now. And the deadline is this Friday to get registered for the private placement. Because remember, in the private placement, you get free warrants in addition to your shares. So take a look at this with me. If Impact gets back to its former 2016 or 2020 peaks, which is very realistic given the undervalued nature of silver, given where it has traded before in the past at major peaks, if it can get back to its major peak right here around $1.25, that will represent a gain of 600% in the open market compared to the current share price under 20 cents. That would not be a bad gain at all. I would take that gain, and this is why I think buying shares in the open market, if you can only invest a few $100s or a few $1,000s, let's say, this is why I think Impact is worthy of your consideration for open market purchases. However, if you can invest at least the minimum with us, which remember is 7,500 USD, which is roughly equivalent to 10,000 Canadian dollars, 7,500 US. If you can buy shares with us at the discount and then get the free warrants in addition to that, the math works out based on the warrants that for the exact same chart, for Impact to get to the exact same level that is a 600% gain in the open market, if you get the free warrants with that because you're buying with us in the private placement, that turns into a 1,000% gain for you with the warrants. This is just the math. This is just how it works out. If you're buying with us in the private placement, we have a very limited amount of this placement. I cannot guarantee availability. This will be available on a first come, first basis with the closing date of this Friday, close of business. I cannot make any exceptions to that. That's how popular I think this is going to be. I've shown you the reasons why. This is an existing producing company. Their existing mine is over 90% silver, so they have that previous leverage to the silver prices. And then they have the small new acquisition that they are exploring around that has that major upside potential. If in fact what they think, which is that this could be one of these large CRD, these carbonate replacement deposits, if they find that, this has that 10 to 20x potential based on the new acquisition alone. Okay, so that is the update on silver itself. Silver is lagging gold, but every time that it does that throughout history, just like we saw, eventually silver catches up to gold in a much greater leverage effect. We talked about Impact Silver. I said, remember, my guarantee, they are not paying me a single dime to say this. This is a company that I own shares in because I think it's going higher over the years ahead. If you would like to join us in the private placement, remember, if you can invest the minimum of 7,000 USD, which is roughly equivalent to 10,000 Canadian, the deadline to register for our Elite Private Placements program is this Friday, April 25th. This is available on a first come, first served basis. If you're later on in the week, I cannot guarantee availability. So please call us or email us to get registered as soon as possible. Remember, these are the exact same shares in the exact same company, but you get the shares at a discount and you receive the warrants for free in addition to the shares. And that's the way that the company rewards you for helping to support their development, such as exploring on the new Plomosas mine, which they have a sense could end up being one of these gigantic CRD type deposits. So if this describes you, make sure to join our Elite Private Placements to get registered by this Friday. If you would like to follow along with the other silver and gold mining companies that we invest in, you should check out our Precious Metals Intelligence program. That is for you. We produce weekly videos just like you're seeing here, but a lot more in depth. We cover physical gold, physical silver, Bitcoin, the stock market, the cryptocurrency markets, the rest of the commodities, everything sent right to your inbox once per week. If you would like to sit down with myself and this is too much, you're not sure if Impact is right for you, maybe one of the mining funds is right for you, maybe it's better for you to stick into a mix of physical bullion. If you'd like to discuss your personal situation, you can reach me by booking a consultation on the appropriate tab on our website, the Consultations tab. I am completely independent. Remember, I do not take any funds or fees from any of these companies, any of the bullion dealerships. So that way, I am able to sit down when I work with my clients and I'm able to help them navigate these markets from an independent perspective. Remember, that is not a very popular business model here in these markets, but it's the business model that I believe in. I hope you will join us with Impact Silver, and if it's ready for you, your time to really try to change your life, join us in the private placement deadline this Friday.